JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of July 2020, so yep, welcome everyone. Welcome to this last Monday of July. So yeah guys, welcome everyone. So yep, as always, we're gonna have a quick look at the charts, some of the charts that we looked at last week, some new ones, just to see how everything's kind of getting along. But as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, let's quickly have an update on what's happening here globally in terms of the coronavirus. Now, as you can see, the figure continues to rise, unfortunately, but on the good side is the fact that we had a bit of a decline in total cases per day. So and of course the total amount of deaths as well decreased. So yeah, that's kind of seen as a nice positive here, but yeah, again, don't get me wrong. I mean, we have seen these figures kind of falling and then kind of resurging again. So that's why we'll take it with a bit of pinch of salt, and of course we'll keep monitoring. We'll continue monitoring the numbers. But for now, of course, at the moment, it is great news that the numbers are declining or have declined. So let's see if they can continue doing so. Now let's see what how the market got affected by all this, and of course here you can see that Nikkei 225, this is the first one I want to touch on, and last week it was trading above this upside support line taken from the low the 15th of June, so that was great news. However, this morning it kind of opened with a gap to the downside, and that's understandable. The cash index was driven lower because we did have a bit of weakness last week in the equity markets. And Nikkei was closed on Thursday and Friday, but yep, basically that's the kind of situation what we're having right now. The index closed slightly in the red, although we are seeing here a nice push higher, and the candle here is kind of, it looks like positive, but still the index kind of closed in the slightly in the red because it opened with a huge gap to the downside. Now of course, for now we're gonna take it carefully here, because what I was saying previously, that if this upside line gets broken, then yep, there is a good chance for this one to drift lower. And as you can see, yes, it did go lower, especially if we look at the cash index. However, I was saying that keep your eyes on this barrier right here, the 22,285 zone, which is marked by the low the 10th of July. and a nice good drop below it could open the door towards further declines. But you can see that the price kind of got back up here. However, it still remained below this upside line, so this kind of still is helping out the bears. For the bulls, we would need in order to kind of help out the bulls, the index would need to kind of get back above this upside line and push above the current highest point of July near the 22,965 zone. Slightly above that, we do have the highest point of June here near the 23,186. And a nice good pop above it, of course, would confirm a forthcoming higher high, and more buyers could be joining in. However, again, like I said, be very careful. For now, we've ended the trading session here just bang on this line, so neither kind of the bulls are satisfied nor the bears. So that's why we will wait for a clear breakthrough either through the 22,285 zone here on the downside, or we'll wait for at least a push above the current highest point of July near the 22,965 zone. So keep your eyes on those. Now, Shanghai Composite is trying to trying to stay in the positive zone. Last week I've mentioned that if we get a nice drop and we get a nice daily close below this area here, below the low, the 17th of July, near the 3,181, then yes, further declines could be possible. But as you can see, it didn't really kind of stay below it. But don't get me wrong, we still have about 50 minutes left of trading here on the Shanghai Composite. So if eventually it does drift lower here, and if it does drop below this 3,181 zone, then of course, yep, lower levels could be met again. We'll then aim for the 3,127 territory, which is marked by the highest point of January here, and then if further declines could be possible. But again, we need that confirmation daily close below the 3,181 zone before aiming for the downside. In terms of the upside, again, also, of course, the fact that it's still balancing above this key support area is, of course, a nice good thing for the bulls. However, probably more of them would prefer to see a push at least back above the 3,336 territory right here, which, as you can see, last week, for example, acted as a fantastic area of resistance. Recently, it also acted here as a good support. And just to kind of remind you that this level here, the 3,336, is the highest point of March of 2018. Let me just double check that. Yep, there we go. That's the highest point of March 2018. So a nice good daily close above that could in a way open the door towards maybe back towards the current highest point of July near the 3,457 territory. So keep your eyes on that one. Now jumping into German DAX, here the situation is a little bit difficult. Last week the index closed in the red. It closed the week in the red. However, it managed to remain above this upside support line taken from the low of the 19th of March of this year. So in a way, it kind of is still giving us an indication that there is still a chance for some upside. And in a way, last week I told you guys to keep an eye on this barrier right here, the 13,237 zone, which what I was saying, that if it continues to provide decent resistance, then we may see a bit of a correction here to the downside, maybe all the way towards this upside support line. And this is exactly what happened. So the index drifted lower. It almost came close to testing this upside line, but to be honest, it looks like that the cash index might have already tested that. So now the price is currently the price is balancing near the 12,850 zone on the cash index. So not far from where it ended the week last week. So yep, we'll keep an eye on this one, and if the price somehow manages to get back above the 12,913 zone, which is the highest point of June, then yes, we will aim for some upside again. We'll target these levels, the highs of last week, and yeah, we'll take it from there, guys. But for now, the fact that it's still the cash index is still balancing above this upside line, of course, that's wonderful news for the buyers. However, just probably wait for that push above the highest point of June first, and then yep, we could consider some more upside. Now gold is taking center stage in everything right now. So basically this commodity managed to overcome its its previous all-time high, and this is what I was talking about last week, guys. If you were following me, basically I was saying that our target will be that 1921 zone, which is the previous all-time high reached in 2011, and we managed to overshoot that, and we managed to reach a new target. Don't get me wrong, for now we will talk about it as the current highest, the current all-time high, because it has been reached today, this morning. We're not gonna that was near 1944 level. In a way, there is still a chance that this could push further north above that level, but let's say if it struggles to get above the 1944 zone, then maybe a bit of a correction here to the downside could be possible. And let me just probably clear up this chart a little bit. Let me just start fresh, because it's need to kind of do it all over again, because we've managed to overcome, and we managed to create overcome the previous all-time high and create a new one. So first of all, let's see that this commodity is still trading above this upside support line taken from the low of the 20th of March. So that's of course good news for the buyers. However, it had already a decent kind of rally, and the commodity, this precious metal, reached the high near the 1944 level. Now the big question here is, can it push further north? If it cannot, then we may see a bit of a correction here to the downside. And if gold starts falling somewhere below the let me just grab this one line. If the gold starts falling somewhere below the psychological 1900 level, then we may get a bit of a larger correction here to the downside. And the reason why I'm saying that it's correction, because don't forget that we're still trading above this medium term upside support line taken from the low of the 20th of March. So apologies. That's why we'll be very, very careful here, guys. Of course, if this barrier gets broken, then, well, I mean, this would place the commodity into the uncharted territory again, and well, I mean, then we can just aim for that psychological 2000 zone, and that's it. But like I said, let's keep it let's be careful here. Let's keep it short and simple. If gold struggles to overcome this 1944 level straight away, then maybe, like I said, we could see a bit of a correction here to the downside. And if it falls below the 1900 level, then we could go for a bit of a larger correction towards this upside support line. So yep, guys, that's why for now be very careful. And yeah, be very cautious around here. But like I said, keep your eyes on these two levels, at least maybe for today or tomorrow. And then yep, I'll pick up on gold again. But for now, basically, all eyes are on the 1944 level. If that continues to provide resistance today, then maybe, just maybe, we could see a bit of a correction here back down. And of course, let's see if this 1900 level will continue to provide support. Now silver followed suit, and last week I talked about silver, and I was telling you guys this idea where keep your eyes on, well, I was suggesting to keep your eyes on the 23.6% retracement on the Fibonacci, which could act as a nice area of support, and it did. It found here, and it found support near this 22.22 level, which is that 23.6% retracement on the Fibonacci, and then yep, the pair rebounded and pushed higher and overcame the this high. And let me just remove the Fibonacci here. Let me just get rid of it, guys. So it overcame the 23.25 level, and this morning the commodity managed to reach the 24.38 zone. So but don't get me wrong, that's not the all-time high for silver here, because silver still has loads of room here until it could reach one of its previous highs. And let me just jump into a monthly chart. As you can see, the all-time high for silver was back also in 2011, and that was near the 49.83 level, and we are still at around 24 zone. zone. So basically, yes, I mean, it could travel. It still has loads of room here where it could move, but of course, let's go step by step on this one. And for now, if we could jump back into a daily chart, let me just quickly do that. And for now, basically, yes, it could continue pushing further north, but let's be very careful here. And if this barrier gets broken, the 24.38 zone gets broken, which is the current highest point of today, if that then yes, of course, higher levels could be met. And for this, probably, let me just jump into a monthly and pick a level here, which is this one right here, which is the high of the first the highest point of August of 2013, and that's roughly around the 25.11 zone. So that's going to be our next target, the 25.11 zone, which is the highest point of August 2013. So keep your eyes on that one, guys. And but if, like I said, like the same story with gold, if, for example, by any chance this commodity fails to move above the this 24.38 zone straight away, then maybe we could see a bit of a correction here to the downside. Now, if this commodity starts correcting all the way below the 22.26 zone, which is the low of the 23rd of July here, then maybe we could see a bit of a larger correction to the downside, going kind of all the way towards this upside support line taken from the low of the 18th of March. So again, for now, be very careful, be very cautious, and keep your eyes on some of these levels. And like I said, mostly for today, especially, keep your eyes on this 24.38 zone, which is currently the highest point of today. Now, another beautiful move here that we had here, and that was Bitcoin. And Bitcoin had a great move during the weekend. So it drifted higher, further north, and today it continues that rally, and we're approaching this the highest point of June of this year, and that's roughly around the 10,398 zone. So I talked about that level in general. I talked about this area right here, the highlighted one, because that was what I was saying, that we need to see a clear break above this area before, let's say, getting excited about larger extensions to the upside. That's the slightly above that June high is the 10,491 zone, which is the current highest point of this year. And if we get a nice pop above that, then of course this would confirm a forthcoming higher high, and more buyers could be joining in. So that's why for now, guys, be very careful. We are, like I said, approaching a key resistance level, and if we get a break above that, and we do see a daily close, and not some sort of a false breakout, but if we see a nice daily close above this 10,491 zone, then yes, of course, first of all, it confirms a new higher high, and second, it opens the path towards the next potential target here near the 10,913 level, marked by the highest point of September of 2019. So keep your eyes on that one. Now, another crypto that had even a better move, and that was Ethereum. And look at the surge here that we had, especially going from last week. So basically, Ethereum, first of all, managed to overcome the highest point of June near the 253.54 level. This is what I talked about previously. What I was talking about previously was also that if we get a break of this above this 253.50 level, then the next target for us is the 278.26 zone. And as you can see, not only that it managed to overcome this barrier, and not only that it managed to overcome the highest point of this year, it near the 289 zone, then it kind of continued to rally, and Ethereum kind of ended up today from testing the 329 zone. So roughly around there, just kind of fell shy a few points of reaching the 330 zone. And you can see that now the big question here is, will we see a bit of a correction first and then another push higher, or will this continue pushing further north? Now, the way we could look at this here is, of course, if we get another break above this 329 zone, then the next potential target is, of course, this highest point of, and let me just quickly grab this one. up. There we go. So the highest point of June 2019, or in other words, the highest point of 2019, and that's roughly around the 363 territory. So basically, for now, keep your eyes on this one. Could be quite interesting, but let's be very careful because we had already a decent rally. So maybe a bit of a correction here could do the trick for more buyers, because more buyers could join in here at a lower price and then drive this one higher. So that's why I'll be very careful for now. Now jumping into a few pairs very quickly. So USDJPY. So I've talked about this one last week, and last week, as you can see, the pair failed to move above this barrier, above the 76.79 zone, and of course the pair started drifting lower as well, together with the equity markets, because as we know, the yen is seen as a safe haven here, the Australian dollar is a commodity-linked currency, which tends to perform better when the market performs better. So here, obviously, we had a bit of a decline. However, it still remained above this short-term upside support line taken from the low of the 2nd of April. So, in a way, for now, what I was saying previously, and what I'll keep on saying, that as long as this upside line stays intact, there is still a chance for this pair to move to the upside. However, given that we saw this barrier here, the 76.79 zone, kind of providing decent resistance, then probably we'll take a bit of a cautious approach here, and maybe wait for a break of that level first before getting excited with some larger extensions to the upside. Until then, all this area right here could be a bit of a tricky one, and will stay neutral as long as it trades in this little area between the this 76.79 level and this upside support line. If this upside support line breaks and we see the rate falling all the way below the 75.16 zone, then yes, we will start considering some lower areas. US dollar against the CHF now, against the Swiss franc, and you can see the strong move that we're having here, and this kind of is not looking good here for this pair. Today you can see that it even drifted below the previous lowest point of this year, near the 0.9184 zone. So now, of course, the big question: will it actually stay here below this area? Will we see the daily candle remaining below this 0.9184 territory? If so, then, well, I mean, further declines are possible, and now we need to I need to scroll back here and to find this good possible next area of support, which in a way could be this one right here somewhere. Not this one, but let me just try to capture. There we go. Roughly around here, guys, the 0.907273 mark, and that's basically the lowest point of May of 2015. So this is where we are right now. You can see that, yes, this level is a very critical one right now. This lowest point of the previous lowest point of this year, near the 0.9184, and let's see if, like I said, if the pair can actually drift further south, if it can stay below this level. If it does, then yep, like I said, the next target is the lowest point of May 2015, and that's roughly around the 0.9073 mark. GBP USD very quickly here. So the pair is having a nice push higher. So yep, that's great. So we can see that the dollar weakness is helping this pair to move a little bit further kind of north. It's not really that the pound is the stronger one, is mainly the weakness in the US dollar. So the pair right now is kind of testing this barrier, the highest point of June, near the 1.2813 level. This is what I talked about last week when I was saying that if we get a pop above the 1.2669 territory, the next target for us is the 1.2813 level, and we managed to comfortably reach that area and also to overcome it. But today you can see that, yes, it overshot it. It's trading currently slightly above that barrier. So let's see if it can stay here. If it can, then of course the next target for us here will be the the highest point of March of this year near the 1.32 zone. I will pick up on this. We could find, of course, some other potential levels here, like for example that psychological 130 zone. That could be our next target, and yep, if it continues to rally, then like I said, keep your eyes on the highest point of March near the 1.32 zone. For now, all eyes are on this barrier on the highest point of June. We need to see if actually if this pair continues to trade above this area. Even if it doesn't, even if it somehow falls back below it, still there is a possibility for the bulls to step in here somewhere, maybe near this 1.2669 zone. This could be maybe that last resort for the bulls to step in, but if this fails to provide support and the rate starts drifting lower, then maybe we could see a bit of a correction here towards this upside support line taken from the low of the 18th of May. And finally, EURUSD. So here the pair accelerated nicely to the upside, and this morning we managed to reach this 1.1725 level that I talked about last week, and this one is the inside swing low here, the inside swing low of the 24th of September 2018, and you can see that this level acted as a perfect resistance zone. Now the big question here is, can it actually push further north? If it can, then the next target is the 1.1815, marked by the highest point of September of 2018. But if this barrier, the 1.1725 level, continues, for example, today to provide some sort of resistance, well, be very careful. We may see a bit of a correction here to the downside, and of course then we'll take it from there, because if suddenly it starts falling back below the 1.1622 zone, and let me just remind you what that level was here in the past, the 1.1622 zone was the highest point of October of 2018. If this pair suddenly starts correcting, dropping below it, then we may see a bit of a larger correction here to the downside. But still, don't get me wrong, overall, if it continues to trade above this upside support line taken from the low of the 14th of May, even if it goes for a large correction here to the downside, still, if this upside line remains intact, yep, we will stay positive overall. So yep guys, for now be very careful, and like I said, keep your eyes on the 1.1725 territory today. If we get an overshoot above that, the next target is that 1.1815 level, marked by the highest point of September 2018. So yep, something to kind of keep an eye on for today. So guys, I really hope you found it useful, and thank you very much for watching and listening. If you want to catch my video later on, my traders tea time is always 13:15 GMT. We'll have a look at some of these instruments, some new ones, and yeah, we'll take it from there. So have a wonderful trading day guys, and I'll see you later. Thank you very much, and bye bye.